If you were a LLC and you wanted to switch to S corp for the purposes of distributions versus your salary, that kind of thing,
Mhm.
um, how does that work? Is that something that someone can do through your services, or how does that work?
Yes, most of it I do. I also have a couple of attorneys who are business law attorneys that I have as references for me just to make sure that if need be, I can go to them and check everything out. One of the things that people don't realize, in particular with S corps, is with an S corp, if you are one of the shareholders of the S corp who materially participates in that company, you have to be paying yourself a salary. And that salary has to be based on reasonable compensation for what you do. If you're a sole proprietorship, you take owner draws. If you are a partnership, you take owner draws. If you are an S corp, you're paying yourself a salary, and it's got to be based on taking your job description and seeing what that would be paid in the marketplace.
Yeah.
So if you're running the company as the CEO and you are a plumber or plumbing technician, then you've got to do a mixed calculation of what would I pay someone to be the CEO for X number of hours during the week? What would I pay somebody to be a plumbing technician for X number of hours a week? If you're not paying reasonable compensation, then the potential is when you get audited, the IRS is going to come back to you and say, justify what your salary is. And if you can justify it, then most likely they'll agree with it. If you don't have a strong justification, they're going to say, well, you're paying yourself too much or too little, and we're going to adjust that. And that ends up adjusting your net income, which adjusts what your taxes are based on, which creates a waterfall effect.
Right. Now, when you're a sole proprietor or a partnership, that would be under LLC, right?
It could be under LLC. Here's the thing that a lot of people don't realize. LLC is a legal structure. That determination you get by filing with your state, usually state secretary of state. If you are a sole proprietorship, partnership, or an S corp, that's your tax status. And sole proprietorship, you don't really have to do anything for. You just file your taxes. Partnership, always recommend you have a partnership agreement, and then that partnership's going to issue you K1s, and you're going to file 1065s for taxes. If you're an S corp, that is an election that you have to file a separate form for with the IRS so that it's designated in their records. And then that's a pass through entity for your income. And then your taxes get taxed at the rate that the individual who it's passing through to, as opposed to at the corporate level.
Got you. So you could be a LLC and still act like and still have S corp status, correct?
Yes.
Okay. So when someone's starting a new filing or creating a business or corporation, what would you recommend they start off with? Is it going to be determined based on what kind of business they're starting? Let's say they're by themselves, but yet they want to keep themselves in a situation where they know their earning potential may, have a big tax event. So maybe they want to do S corp because they want to, kind of what would you call balance it out with a good salary versus distributions? What would you say? What would you recommend? Should they do the LLC still, or just file as the S corp?
I recommend to a lot of my clients that they start up with an LLC because that provides a legal layer of protection between the assets and liabilities of the company versus their own personal things.
Right.
So if the company gets sued in general, whatever lawsuit that ends up, then it can only go after the assets or liabilities of the company as opposed to flowing all the way through to the individual. There is a difference with LLPs, which is limited liability partnership, which in a lot of states is more dependent for professionals such as accountants, doctors, attorneys like that. And they have a lot of different rules regarding the liability that the partners can be held to. With the subchapter S corporation, I usually don't recommend them companies rolling over to an S corp until their income is somewhere above $50,000 a year. What's going to happen is because you have to pay yourself reasonable comp, you would end up, if your gross receipts are less than 50,000, you're going to end up having to record payments to yourself, but if you don't have the cash to pay them, they're going to sit on the books as money owed to you until you get money in to pay those. And it's not necessarily a benefit to take that salary until you start having the money coming in like that.
Right. And you said it's not very hard to change from LLC to the S corp, right?
No, it's for the IRS's recognition. There is a form that you file that just says you're electing to do an S corp, and the IRS, in their time, will eventually issue you an approval for that, saying yes, that's good to go.
Okay.
IRS, because of the pandemic and everything else, is still seems to be running behind with a lot of things, so that it may not happen in the first month to 2 months. It may take 3 months or more, but they will get to you with that designation.
Got you. So you recommend if your revenue, top line revenue is less than 50,000, you probably should stick to LLC. Is that right?
Yep, and
And
it's
how does distributions work for LLC? I know it's worded differently, but like the business are the owners, shares or earnings. How does that work? How do they get taxed?
the owners are shareholders for what's called an SMLLC, which is single member LLC. Um, and in that case, owners are allowed to pull money out as owners' draws as long as it's not in excess of accumulated profits or their basis in the company. If they put in X amount of dollars, if the company loses, that adjusts the basis, and you have to look at the basis to see how much is coming out in owner draws. With a partnership, it's similar, but partnerships can have what they call guaranteed payments, so that that money comes out on a regular basis. And with partnerships, you do not have, um, you don't pay salaries. The partners are allowed to have their ownership portions and draws based on that.